for taxation of virtual digital assets. There has been a phenomenal increase in transaction in virtual digital assets. The magnitude and frequency of these transactions have made it imperative to provide for a specific tax regime. Accordingly, for the taxation of virtual digital assets, I propose to provide that any income from transfer of any virtual digital asset shall be taxed at the rate of 30%. No deduction in respect of any expenditure or allowance shall be allowed while computing such income except cost of acquisition. Further, loss from transfer of virtual digital asset cannot be set off against any other income. Further, in order to capture the transaction details, I also propose to provide for TDS on payment made in relation to transfer of virtual digital asset at the rate of 1% of such consideration above a monetary threshold. Gift of virtual digital asset is also proposed to be taxed in the hands of the recipient.
In a welcome step, the Indian Finance Minister during the budget presentation on the 1st of February 2022 announced the applicability of tax on income earned from trading of virtual digital assets. This new term, virtual digital assets, as defined by the Finance Bill of 2022, includes cryptocurrency coins and tokens including non-fungible tokens or NFTs and any other digital assets as classified by the Government of India from time to time. This much needed clarification has brought immense relief to the crypto industry and its various stakeholders and market participants. Before this announcement, there was ambiguity on the legality of trading on cryptocurrencies, and it was subject of much discussion and debate. There were always questions by the potential participants on whether they would be breaking the law if they traded in cryptocurrencies in India. In this perspective, we shall be discussing during this session the ramifications of the regulatory changes that are impacting the crypto industry, both in the Indian financial ecosystem as well as the global crypto markets. We will talk in depth about the regulatory framework, global regulations, and central bank digital currencies or CBDCs. To begin with, in the first part of this session, we shall be discussing the evolution of crypto regulations and oversight by the central bank and government on blockchain technology and cryptocurrency industry in India over the last decade. Let's get one thing straight. Cryptocurrencies are not banned in India and trading in them is allowed. Having said this, the Indian government and the Reserve Bank of India's stance is leaning towards a central bank digital currency that is also known as CBDC, issued officially by the central bank. In fact, acknowledging the role e-currencies would play going forward, the RBI has already put in considerable work in evaluating the viability of its own CBDC. In spite of the budgetary announcements of the 30% tax on the income from crypto transactions that was announced, cryptocurrency trading is still, however, largely unregulated in the Indian markets. A robust regulatory framework with oversight by a regulatory body is required to ensure a scam-free and reliable crypto market. This is all the more essential to ensure greater confidence reposed by both institutional and retail participants in the cryptocurrency markets ecosystem. Let us check the evolution of the regulatory framework in the last few years in cryptocurrency markets in India. For that, we need to rewind a bit to 2017. On the 15th of March 2017, the Government of India set up an interdisciplinary committee to study cryptocurrencies and the growth of virtual currencies. But the report was not made public. During November 2017, an interministerial committee was constituted by Ministry of Finance to study issues related to virtual currencies and propose specific action. In the same month, a public interest litigation or PIL was filed before the Supreme Court seeking regulation of cryptocurrencies. Then in December of 2017, the central bank, the RBI, issued its third advisory cautioning people about the risk of trading in virtual currencies. The Ministry of Finance compared cryptocurrency to Ponzi schemes and cautioned users that virtual currencies are not legal tender in India and desisted them from trading in cryptocurrencies. In a landmark speech during the budget presentation on the 1st of February 2018, the former Indian Finance Minister Shri Arun Jaitley announced that cryptocurrencies are not legal tender and cannot be used as part of payment systems. We now are in April of 2018 and the RBI announced that it was planning to prohibit Indian banks and related entities from dealing with cryptocurrencies. The RBI circular barred banks from dealing with corporates associated with cryptocurrencies and other forms of digital assets. In February of 2019, the Inter-Ministerial Committee or the IMC recommended banning cryptocurrencies in India and suggested creating a digital rupee. The IMC also submitted a draft bill on banning cryptocurrency and regulation of official digital currency bill, which was made public in July 2019. In the month of March 2020, through a landmark judgment, the Supreme Court of India overturned the RBI April 2018 circular prohibiting banks and related entities from dealing with corporates that were associated with cryptocurrencies on the grounds of proportionality. This lifted the blanket ban on cryptocurrencies. Things picked up pace in 2021. In January of 2021, the RBI stated it is exploring the need for a digital version of fiat currency and how to operationalize it. In April of that year, the Ministry of Corporate Affairs amended the Companies Act 2013, making it mandatory for companies to disclose their cryptocurrency asset holdings. And then the next month, the central bank further directed Indian banks and other financial institutions to conduct due diligence on their users who trade cryptocurrencies. In an effort to build an all-round consensus, the Government of India Standing Committee on Finance conducted several rounds of discussions with the cryptocurrency industry stakeholders during the second half of year 2021. Extensive discussions and feedback was obtained from cryptocurrency exchanges, banks and financial institutions, Blockchain and Crypto Assets Council or BACC, Confederation of Indian Industry or CII, Association of Chamber of Commerce and Industry or ASSOCHIM. And then on 1st February 2022, during the budget presentation for financial year 2022 and 23, the Indian Finance Minister Srimati Nirmala Sitharaman announced a 30% tax on virtual digital assets. She clarified that there would be a 30% tax on virtual digital assets as well as 1% tax deduction at source or TDS blocked by the buyer of the digital asset and paid to the government. This would enable tracking of crypto transactions. Also, the losses from crypto trading will not be allowed to be carried forward to future years. Any crypto gifts received shall be taxed at 30% as the sources of other income. Additionally, the central bank RBI is expected to launch a digital rupee, which is the central bank digital currency, and this shall be considered as a banknote or legal tender. The Indian Parliament is also proposing to introduce the cryptocurrency and regulation of official digital currency bill in the year 2022. The new bill seeks to construct a framework for creation of the official digital currency.
Please complete this module by viewing the other sessions.